Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model for the 2nd of the 2nd, 2021. The time is just coming up to 5 to 5, 0455 GMT, and this is the daily briefing. Asian session coming to a close, European session firing up. Our lunchtime is the North American session. I've written stuff up, so let's get underway. We've got a lot to get through. So Monday was yesterday. That was the first trading day of the week. We had the negative opposed driver in the euro at minus 152, and so we've got front and backdoor flows, and they were mainly going into the dollar. So we had the opposing positive flows going into the dollar at plus 127. And that was on activity of plus or minus 193. The yen was coming up a little bit, plus 66, and the pound was dropping off at minus 41. Intra-week then, so these are the flows that have happened so far this week from Monday open to about 15 minutes ago. Interestingly, we've got the euro acting as the unopposed negative driver, so we've got no backdoor flows. So we've got opposing positive flows, mainly as you can see going into the dollar at plus 80, and the yen and the pound staying fairly static at plus 19 for the pound and plus 12 for the yen. Excuse me. So we just got knock out the intraday, and then we can do some analysis. So intraday then, which is Tuesday today. What are we, the 2nd of the 2nd? So let's have a look, and this is to about 15 minutes ago. So that's the open. What have we got then? We've got yen dollar on the negative, euro pound on the positive, plus 68 for the pound, plus 34 for the euro, minus 45 for the dollar, and minus 57 for the yen. That's on activity of plus or minus 102. We've got a positive opposed driver in the pound, positive rock in the euro, negative mover in the dollar, and a negative secondary driver in the yen. Right, what's going to knock all this about then? So, right, well, we'll rattle through this. Today we've got German Tier 1 retail sales, so that's quite interesting. And if you remember, the German data cycle is on the up from our video. Also earlier today we had the Royal Bank of Australia AUD rates decision that left things unchanged, did a bit of jawboning, bit of moaning, bit of positive, pretty neutral. Right, so and on Sunday, which was a day and a half ago now, we had China PMIs were weaker but above 50, showing minor expansion. So today, said we've got this RBA thing we've had, and tomorrow we've got Thursday the 4th, we've got the GBP rates decision, Bank of England, etc. And Friday we've got NFP, non-farm payrolls. So that's a pretty busy week coming up. And then next week we've got, on Wednesday the 10th, we've got the New Zealand rates decision. And on the 9th, which is the Thursday, we've got the China trade balance and CPI. And just a heads up for the oil market, we've got quite a few OPEC meetings who are going to be interesting this week as well. So, and on a separate note, the so-called rogue retail investors are having a go at silver, and they've been choked off by higher margin requirements. Anyway, that's a separate issue. Right, so there you go. So let's talk about this then. So yesterday, remember, we were expecting yen strength and pound weakness, and we were positioned for that. And what did we get? We got the euro weakness driving in an unopposed manner. We got pound weakness as well, but only as the negative rock, and we got a bit of yen strength as the positive move at plus 66. So we were sort of in the secondary flows sort of area of being correct on that, and our positions were seriously knocked around all over the place yesterday, but we'll go into that later. And over the week then we've got this interesting situation. We've got the euro being the unopposed negative driver, and as you know, if you have an unopposed negative driver, then that's usually indicative of either a floor in the complex, or it's the start of a further ramp down. Now the euro has been pretty much pasted off for quite a few weeks now. This is likely to be a floor in the euro, in the same way that the yen, we were saying it was likely to be a floor in the yen. But anyway, we'll talk about that in a minute. So far today though, we've got the pound acting as the opposed positive driver at plus 68, and the yen, so we've got yen weakness again, which is not really what we're after, and we've got pound strength, so we've got the opposite, and we've got dollar weakness at minus 45 and euro strength at plus 34. Bearing in mind that we're long euro pound, you can see that whilst we've got euro strength, we've also got pound strength. Not helpful. Anyway, let's rub this off and talk about what we're going to be doing. So, right, get rid of that. Right, so we're running. What are we running? We're running pound CAD, euro, pound dollar, pound yen. So we're long, short, and we're short there as well. Now it went fairly bent yesterday, in the sense that we had to swap out trades. We ended up getting much lower positions in these. Then we had a tremendous rally in our positions, and we were swinging right up again. So and we're basically back to where we started it, except we've got lower entries, which we're always happy with. But our net overall position is about the same, marginally improved. We're about 450 points over 16 trades in the red at the moment. But as I say, we did swing quite down. It was a case of beat the market off with the clipboard and give it some stick with the chalk, and we were just basically swapping out. And at one point we were knocking on the door in excess of 900 points in the red, and then it swung right up, and we were about 300 points in the red, and we're now back to about 450 red. So the market is not playing nicely, but then so what? So anyway, what we're going to do, we're going to stick with these positions. Obviously the CAD's going to be sensitive to these OPEC decisions. We've got the GBP rates decision on Thursday, which is now 2 days away, and we've got the euro now acting as the unopposed negative driver, which we believe to be a floor. So this is what we think is. So we believe that we've got a floor in the euro complex. So we think the euro, we've got a floor in the yen. We've got a floor in the yen, but at the moment we've got yen weakness because we're getting an equity transmission again. Equities are having a go. So what does that leave us with? Dollar and pound. Now the pound is likewise is the sort of the dozy option for if you're selling the yen, you buy the pound, it seems. so it's the sort of dozy option there. But we believe the pound is going to drop, as you know, but that doesn't mean it's going to drop quite yet. But anyway, so, and the dollar, as you can see, the dollar was mainly strong, sucking in the flows. And if you get risk on, which is basically what yen dollar here is, you tend to get a weaker dollar in normal circumstances. Not that these are normally weak. So let's just rub this out, because that's, instead of it being a wish list, we need to know what's actually going to happen. So if we get so we've got euro, dollar, yen, pound. Well, if we get a continuation, excuse me, of risk on today, for a while at least, we're going to get a bit of dollar weakness. We're going to get yen weakness, and they're probably going to pump the pound. That is not helpful to our positions, but we believe it to be temporary. But that's where it's likely to be. So that's where we are. That's where the market, if it carries on with the Asian session. But ultimately, we think all this will turn around, and it will be a good place to be short pound CAD, long euro pound, short pound dollar, short pound yen. Hope that was useful. See you tomorrow for the daily briefing. Thank you.